Welcome back to the How's the Market podcast. This is our last episode of season 2. It's been a blast having everybody on and having discussions about what's happening in the market. How do we communicate what's happening in the market? And everything that we try to do on the podcast is to give you that perspective, invite you into the conversations that we're having with folks every day here at Keeping Current Matters. And this week we're going to do something a little bit different. I'm going to take the next few minutes and sort of give you a perspective on the 2024 market. And I'm going to use slides like we always have at Keeping Current Matters, and I'll link to those slides in the show notes. You can go grab those because you're going to want to listen to this, maybe re-listen to this, take some notes, and grab the slides because they're great visuals to explain this market. So we're going to jump in and talk about the 2024 housing market. So, if I were to title this, here's what I would title it: 2024 Seize the Opportunity. That would be the title of sort of the next few minutes, or this presentation, if that's one, even though it's a podcast, because I believe there's an enormous amount of opportunity in the coming year. But I do believe there's a second half to that title. We used it on a webinar here a few weeks ago. And the second half is, or get left behind. You can seize the opportunity or you can get left behind. And I believe there will be both types of folks in the business this year. Many people that get left behind will be looking in the rearview mirror. And they will be thinking about what happened last year. And gosh, I'm glad it's 2024. I'm recording this in the first week of February, and let's be thankful that it's a new year, a new opportunity. And I believe this market and this business and this year will bring new opportunities. So, maybe you've heard it. I don't know, that we have talked about at KCM that this year will be the year of the fives, and I'm going to break that down over the next few minutes. And that comes from a perspective, a relevant market opinion based upon fact, that we believe the second half of the year will bring a mortgage rate in the fives. Now, it might be 5.99, but we believe will be in the fives. Second, we believe about 5.5 million total home sales will occur in this country this year. That's existing home sales, that's new home sales, but be in that 5.5 million range. And third, we believe home price appreciation will be right at about 5% in the coming year in 2024. And so as we look forward, that's optimistic news, right? We've been in this environment over the last year where interest rates have risen, where we've seen less homes sold, and we should expect as we go throughout the year for this market and this business to get incrementally better. And I'm not talking about overnight. Things are going to change and get better, and we're going to be back into the unicorn years that we coined them back during the pandemic and after the pandemic, but in a better business than what we saw last year. So let's hop in. Let's talk about that. First thing, mortgage rates, and I'll kind of refer to my slides here, but I'll do my best to explain those if you're just listening. And always remember what we stand for at Keeping Current Matters is using great visuals. Now, that's hard on a podcast, but again, you can go to the show notes and you can grab those. So if we think about mortgage rates, here's what we know. We know that around the end of October, beginning of November of last year, of 2023, mortgage rates peaked close to 8%, maybe slightly over 8%, depending on where you're looking at mortgage rates, and they've come down since. And even as we record this, the average 30-year fixed is right around 6 3/4. Now, as we go through the year, we should expect rates to come down as we get through inflation, as we get through some of the economic challenges that we've seen over the last year here in this country. And even the Fed's meeting was, in the last couple of days, not so fast, right? They're saying we want to see more happen. And we want to continue to watch that, but we believe we're in a downward trending rate environment right now. Even as we wrapped up the end of the year, Goldman Sachs came out and said, we believe there will be 3 rate cuts this year relative to the Fed funds rate, and that's different than the mortgage rate, obviously, but that is an indication that we're getting through some of the challenges that we faced as a country relative to inflation and the things that the Fed has been working to control. And so as you see that, you should expect to see a better environment relative to mortgage rates, and that's a good thing, right? That helps more people afford a home, and I'll talk about that in a minute. But the thing that I think is crucial for us to understand this year is the relationship between the 10-year Treasury yield and the 30-year fixed mortgage rate. And if you've seen the graphic that we use, it's been shared a lot at Keeping Current Matters. Over the last 50 years, they've had this symbiotic relationship where one moves, another moves. Certainly, if you were to take the 10-year Treasury historically at 170 basis points, you would be at the 30-year fixed mortgage rate. And so understanding that is critical to our business. And even that's making it into the, into news feeds, into consumers' minds, the spread between the 10-year Treasury and the 30-year fixed mortgage rate. And what do we know? During times of economic uncertainty and geopolitical uncertainty, that spread widens. And oh, by the way, that's where we've been over the last, call it a little over a year. Our team went back and looked at the spread between the beginning of 2023 to today, and the average spread has been 280 basis points, almost 100 basis points over what we would normally see. And so if you even think about this, I'll throw you out a few numbers here. When we started last year, we were at around 270 basis points in the spread. We started 2023. Today, we're about 250. So the spread's already coming down. As it continues to come down, we will see good things happen with mortgage rates. And so that's why we believe in the second half of the year, we'll be in this environment where we'll be in the fives. Now, again, I made the joke on the front end, it might be 5.99, but we will be in the fives. And guess what? Psychologically for people, that will be a difference. People will say, you know what, we didn't do something last year. We didn't decide to buy a home, and we're going to do it now. We know that the majority of buyers that paused their search last year paused because of rising mortgage rates for a number of different reasons. Maybe they couldn't afford it. Maybe they said, we're out. But we know that'll change this year. Oh, by the way, what will that impact as well? One of the biggest issues in this country right now, affordability. Right, there's a crisis of affordability. As mortgage rates come down, it will become more affordable to buy a home. Okay. The second thing that I mentioned in the year of the fives was 5.5 million total home sales. Now, this is new home sales and existing home sales that we believe will total about 5.5 million. And there are sort of three reasons that we believe that. One, I mentioned before, buyers that pause their decision. But the biggest sort of block to homes coming to market, or one of the biggest, is the overwhelming number of people that have a great 30-year fixed mortgage rate on their home. They refinanced or they bought during the pandemic when rates were down at 2 3/4 or 3%, and they're not going anywhere. We know that about our business. FHFA released information, and we built a graphic for it at Keeping Current Matters, that 78.7% of mortgage rates at the time of origination are less than 5%. That's shocking. And, good for those homeowners to have a great mortgage rate on the home that they own is a good thing, right? But it prevents inventory coming to market. And the term that's oftentimes used for that is lock-in effect, not the rate lock that you lock on the mortgage side, but these folks are locked into what they have. They're not going anywhere. But I want to read something that Lance Lambert said. Lance, former editor of Fortune magazine and housing market, he said, we might be at peak lock-in effect. Some move-up or lifestyle sellers might be coming to term with the facts that 3 and 4% mortgage rates aren't returning anytime soon. If the lock-in effect eases up further in 2024, it could help boost existing home sales from the very low levels experienced at the end of 2023. So if we see a move in that will sort of be a signal to a lot of folks that said, we're not going to do anything last year, that we're going to do something now. Second reason we believe there will be more homes sold this year is a study that Bright MLS, one of the largest MLSs here on the East Coast, did, and they surveyed buyers, and I sort of mentioned it a few minutes ago, and they said, what was the number one reason that you paused your decision to buy a home? And the number one reason, overwhelmingly, 72% of buyers said we paused because of mortgage rates. It just got too expensive. And what do we know about this year? That will change. You know, one of the best analogies that I've heard on this comes from KCM founder Steve Harney, where he says, we are an Apple store, not a McDonald's. You know, he always uses the analogy of a snowstorm blowing into a town, and let's imagine we all live somewhere, and we can't get out of the house because of this snowstorm. Well, what happens to the McDonald's? Well, the McDonald's loses those meals. We don't decide to not eat breakfast, lunch, or dinner. We just eat at home. We don't go out to eat. So they lose that business, right? You can't go back and get breakfast from yesterday today. You make a different decision. You eat at home in that analogy. Well, what happens to the Apple store? If you were going to buy an iPad when, the day the snowstorm blew in, you couldn't get out of your house, what do? You just delay it. It doesn't mean you make a decision not to move forward. You just say, I can't get out of the house when the roads are clear, we'll go out and we'll buy it, or, we'll address it then. And that's our business, right? People don't decide not to do it. They just wait to do it. And, the term that's always been used in real estate is pent-up demand, right? And we know last year a lot of people didn't make a decision that will make a decision this year. And so that's another reason that we'll see more homes sold. Third reason is new construction. And I want to give you a perspective from the National Association of Home Builders, because home builders are winning in this market. That is for sure. National Association of Home Builders said this: the market currently requires a higher level of new construction inventory due to a persistent lack of resale inventory. Newly built homes available for sale accounted for 31% of the total home sales in November, compared to an approximate 12% historical average. So we know builders are building. We know they're winning in this market. They're using, concessions from a sale or from a transaction to buy down a rate, get people in on an affordable home, and they'll continue to do that this year. So we see lock-in effect easing up. We see more people making a decision. We see builders winning. That will contribute to more home sales. And even last year, as interest rates rose and people said we're not going to do anything, that decision will change. And I think having that perspective going forward in our business is going to be critically important. There's nobody out there that's a consumer right now that's thinking about buying a home that wonders how many homes are going to sell this year. But we do in the business. We wonder that. And I think our job right now is to be ready when folks are saying, we're going to do something. We're already seeing that happen here in the front part of the year. And so as we go throughout the year, I think having sort of this optimistic view and not a rose-colored glasses view or not head in the sand view, but hey, we see what's coming ahead is critically important for us. We talked about mortgage rates. Another reason is the improvement in affordability. That will cause more people to enter the market. The three things that affordability is based upon: the price of the home, the mortgage rate on the home, and wages that people earn. Well, we know people are earning more money today. We can prove that, and we keep those graphics updated here at KCM. We know and we see mortgage rates coming down. We know that home prices will not appreciate at the rate that they have over the past several years of 15 or 20%, much more normal rate of appreciation, and we'll sort of segue to that here, and that'll bode well for affordability. But if we think about the rate of appreciation, that is a critical piece, because we began last year in 2023, people saying homes are going to lose 10 or 20% in value, and that didn't happen. As we sit here on the front end of this year, it looks like, and the numbers aren't out yet, but it looks like we'll be around 6 or 7% home price appreciation in 2023. So we believe that there will be around 5% price appreciation in residential real estate in 2024. And a couple reasons for that. Selma Help from CoreLogic said this. She said, with mortgage rates dropping, demand for homes in early 2024 is likely to be strong and will again put pressure on prices similar to trends observed in early 2023. Most markets will continue to reach new home price highs over the course of 2024. So we don't have enough homes in this country for the number of people that want to buy them. Rates are coming down, more people coming into the market. That will put upward pressure on prices. You know, if you look at home price forecasts right now that are being put out, we follow the top 8 forecasters here at Keeping Current Matters, anywhere from 4 or 5% appreciation to slight depreciation, and those will continue to get leveled up. They'll continue to say, hey, what is that going to look like this year? And I believe they will continue to get more optimistic and raise their forecast as they see the year go along. And there's probably an element of forecasting right now where people don't want to, stick their neck out based on what last year brought. But, even if you look at the home price expectation survey, which goes 5 years out, that's a survey of 100 economists, 100 housing market experts that every quarter say, what do you believe is going to happen with prices in this country relative to homes? And they forecast a very normal price appreciation rate, 2024 and 2025, 2.5, roughly percent is what they're saying, 26, 27, 28, 3 to 4%. We think they'll be higher. We think prices will be higher than what they think in 2024. But there's no depreciation in there. And that's a big point because, people oftentimes wonder in real estate, should I buy a home right now? Is it cheaper to rent? And there are some times that when you do the math, they could say it is cheaper to rent where I'm at than pay a mortgage payment. Well, the number one thing that always kills that argument, it's equity, the accumulation of equity. And if you take that home price expectation survey and you take the average home in this country over the next 5 years, that's worth just over $72,000 in equity. So should you buy a home? Absolutely. If it's the right time for you and your family, it's a great time to buy a home. And oh, by the way, if you add equity to that conversation, the rent versus buy conversation, it makes you look at it and go, okay, it totally makes sense to buy. And I think being educated right now will be the difference maker in 2024. Everything that we do here at Keeping Current Matters is to give you the tools and resources to be the educator out in the market. I think action and education are going to be key. Now, if we think about where we sit in the year in February and we think about what's ahead, a couple of things that I want to remind you of as we maybe wrap up our time together. First, be aware that this is an election year. And both sides of the aisle will use housing as the fodder to say, vote for us. And we're already seeing it. We had the issue a couple of months ago where the sort of fake news came out about Wall Street's buying every home, or 44% of the homes in this country, which was false. But both sides in this year will use housing as a point to try to get their message across and say, vote for me because we're going to fix it. And it's an issue, right? Inventory to affordability, housing is an issue, and it will be focused on. Second thing, be the expert this year on everything real estate. That's our goal at Keeping Current Matters. If you're a member, we are grateful for you. If you're not a member, go start a free trial. Because here's the bottom line. As we go into the spring market, people are going to be wondering what's happening right now in real estate. And we can give them the answer. We can guide them forward. And it doesn't take a lot of time. It just takes you being invested in being the expert and being the one that has the knowledge. We always say the knowledge broker. Be the knowledge broker. Be the one that's out there delivering that information. Third thing I would say here is as mortgage rates come down, broadcast and be vocal about the improvement in affordability. We can do that as we go throughout this to say, hey, the average mortgage payment decreased by this amount as compared to the beginning of the year or when rates peaked in the beginning of November. Why is that so important? Because over the last year, what was screamed from the mountaintop, and it's accurate, how unaffordable homes have become. Now, we need to do an equally as good of job talking about the return and the improvement of affordability. Now, I'm not suggesting that overnight, we're going to be in this amazing affordability situation. We're coming out of 10 years where homes were probably more affordable than they've been in quite some time, if not the history of housing. But we will see improvements in affordability, and we need to be vocal about that. If we miss that, that's on us, because we can help people see, okay, it's becoming more affordable. It's becoming, the average mortgage payment is becoming cheaper in this country. So I hope that helps you as you think about the year ahead. Being the educator and taking action, two things that I will promise you will win in 2024. I want to wrap up this podcast and say a couple of things. One, we are grateful for you listening. We are grateful for your support of the How's the Market podcast. This is the wrap-up of our second season. And if you want the visuals and the graphics that we talk about at KCM, the ones I just used in explaining this market to you, go to the show notes and you can download those. Second thing, if you're not a member, go start a free trial. Love to have you start a free trial. If you are a member, get into the member area and download these graphics. And listen, put them on your phone. Have them with you so you can show somebody. I was with one of our larger clients this past week, and the leader pulled out his phone, and he had pictures of his family and then KCM slides. And he said, every open house that I'm in, I bring these out and I talk to people about what's happening in the housing market. And you can do that too. As always, we are grateful for you listening, and I want to encourage you and challenge you. If you know somebody that's worried about this market or talking about this market, or maybe they're looking in the rearview mirror, share this with them. Like the podcast, subscribe to it. That way, we have more people that are getting educated in this market that are able to make an impact for families all over the country. I always say it, at KCM, we believe every family should feel confident when buying and selling a home, and that's what drives what we do. So grateful for you listening to the podcast. We are grateful for the support that you give us at KCM, and we'll see you in season 3.